What's going on, y'all? It's Investor Zimp, aka Zimp Trades, and we back with another video, another banger. Now it's been some time. I had a long hiatus. I was dealing with some real life stuff that I had to focus on. Couldn't really focus on YouTube, but we are back with regularly scheduled uploads. Now, disclaimer: this video is actually going to be part one in a series of videos I'm going to be doing on advanced trading strategies. I make a lot of videos for new traders, but I've actually been requested to make a couple of videos for those traders out there that have been in the market for some time and they just want some new strategies, some new tools that they can add to their arsenal to make more money. Who doesn't love money, right? I love money, you love money, we all love money. So let's get right into it. All right, today we're going to be talking about gaps. I chose gaps as the first thing I want to talk about because gaps, number one, they're very common. You can see them almost every day, especially if you trade stocks. And that leads me into my number two, actually, where gaps occur in all trading ranges. Whether you trade Forex, whether you trade stocks, whether you trade futures, whether you trade indices, indexes, it doesn't matter. Gaps always occur. And the reason they always occur is right on the screen. They're indicators of a significant shift in market data. All right, this could be a news release. This could be the president of the USA going and speaking. This could be, North Korea announcing that they're closing all their borders for some reason. This could be Japan shutting their banks down for the day. Anything that causes a huge shift in market data in a short amount of time is most likely going to create a gap. The other thing that could create a gap is an imbalance of buy and sell pressure. And just to give a few examples, let's say you got a downtrend and prices going like this. You get to the bottom of the downtrend. At the bottom of the downtrend, there's no more selling pressure. The downtrend's over. You know what there is a lot of? Buy pressure. So you got buy pressure up here, sell pressure down here. Buy pressure is gonna go through the roof, and you're gonna get a huge buy candle. This could create a gap. And it's the same with the inverse too. We can gap down instead of gapping up and etc. So let's go ahead and take a look at an example I've prepared right here. This is a huge gap down, and because of the amount that we actually gapped, this looks about to be 100 to 150 pips on the British pound Japanese yen. So just off looking at that, we can tell that this was probably a news event. All right, because even with pressure, even with a pressure imbalance, price is very unlikely to explode like this without warning. So this was probably a news event. But let's scrap the small talk. Now that you know what a gap looks like, you know what it is. I'm gonna teach you how to exploit it, how to trade it, so you can get your money up, and we can be chilling. All right, so let's get it. Boom. So you got two types of gaps. All right, you got novice gaps and pro gaps. Now, I'm not gonna go on forever about the differences in between the two, but you do have to know how to spot them and how to trade them. With my strategy, you can trade these both the same way. All right, so don't get too confused looking at your chart like, oh, is this? I have to figure out what type of gap this is. Not just if you trade them both the same way and you're doing the right thing, you're following the strategy, then you will be fine. All right, but just for you to know what's important out of this slide is a novice gap is going to gap in the same direction as a trend, and it might fill. A pro gap is going to gap in the opposite direction of the trend, and it's going to retest away from that gap. All right, so let's go ahead and look at this chart example so I can get you guys in the know. All right, so this right here is a professional gap. It's a pro gap. Why? Because we had an uptrend right here. That's why the trend line is right here. And then we gap down in the opposite direction of the trend. Using my ZRE strategy, I'm actually going to link it right here for those of you who don't know it yet. It's a great strategy, the best one. Check it out. But using the ZRE strategy, we're going to find our zone of value. We're going to find our rejection or retest, and then we're going to execute. Using that strategy with gaps is actually a lot easier because price straight up gives you the area of value. It straight up gives you your zone. In this example, when we're gapping down like this, you just draw a zone in the gap space. And as you guys can see, price comes back to that because this is a professional gap. Price is going to retest away from the zone. That's exactly what it does. We have our zone. Price comes over here, comes back to it. We got a little bit of wick rejection, so you could have sold that, made some big money. It comes back up over here, here, here. and we have rejection again, and you can keep selling it and getting profit until it eventually breaks, right? Even over here, it doesn't break. It still comes back up and rejects, and you got huge sell potential, all right? But that's professional gap. Now let's go ahead and look at a novice gap. Boom. So we got a pretty good example of a novice gap right here, you guys. Same thing as before, where we had a trend, but this time in this downtrend, price actually gaps in the same direction as a trend. It gaps down, and like I said, trade this the same way. All of this space now becomes your zone. All right. Now, in this example in particular, price did fill the gap. So this is a novice gap. Price went ahead and gapped in the same direction of the trend and then proceeded to fill it and actually live within the zone. So the way I would have traded this, I would have bought up the filled gap, and then once I peep this rejection right here, because usually after a novice gap gets filled, guys, this is a good piece of advice. Usually, whenever a novice gap gets filled, price will continue to trend, or it's an indicator of an uptrend that's going to come soon, an indicator of the opposite trend coming soon. So, price gap down and filled, meaning that an uptrend is coming soon. If it were to gap up and close down, then that means a downtrend would be coming soon. But in this particular example, it's a little weird because price fills and then consolidates for a little bit. You can see right here, it tried to go up, but it failed and rejected. But even with that being said, if we look over here to the right, an uptrend eventually did start. And if you go all the way back, this gap right here was pretty much the start of the uptrend motion. All right, so this is really showing you every which way to use a gap, because even if you can't get in on the trade and capitalize, like right here, it would have been very hard to capitalize because price started consolidating, not really making a clear cut, concise move after the gap. So it would have been hard to capitalize, but you still could have played a little bit of consolidation up and down with it and whatever you do. All right. But the main thing is you can trade these zones, you can trade these gaps with the same ZRE strategy, but they can also be used as an indicator of a long-term trade. All right, if you could capitalize, you might have missed this, but you could still capitalize off of knowing the significance of this Novus gap, seeing the moves that follow, and then you get an early entry on an uptrend for a buy, and you get to ride out all this profit. All right, so that's going to be it. I'm not going to make this video too long. Again, try to mix this with the ZRE strategy. I'm going to link that in the description and a couple spots in this video. But really, guys, just go ahead, get comfortable with gaps because you're going to see them a lot. And the more opportunities you have to make money, the more money you will make. Bonus round. All right. The market actually just opened up an hour ago, guys. I'm recording this on a Sunday, and it opened up with a gap. So I'm going to take this opportunity that's been given to go ahead and show you guys how I would set up a chart in an event like this. All right, so the first thing, like I said, is draw your zone of value in the gap space. All right, draw that zone of value. And now there's two things that we know can happen when price touches this zone, because this buy right here is fake. This is going to come back down into the gap. All right, so there's two things that could happen. I'm going to go ahead and get my path. There we go. Price could either come back down, retest this zone completely. You will see a rejection with the wick, and then we blast off. All right, that's one thing. The other thing that can happen is price comes down, completely fills this, which what would be, this would make it a Novus gap if it did this, but price would come down, completely fill this, come back to the zone, reject it, and keep going down. So that's exactly how I would trade this gap, and this is exactly what I'm going to be looking at this week. Follow me on IG at InvestorZimp and Profit.Order to keep up with my trades. But this is what we're looking at this week. This is exactly how I trade every single gap with this exact same type of setup. And honestly, that's how you should too, because anything else is honestly just too much confusing. But that's going to be it for me. I hope you guys enjoyed this video. We're back on a regularly upload schedule, so stay tuned for some more bangers, and you will hear from me again soon. Zemp out.